Everybody, it's Al Labarola for Financial Intelligence Training. It is Wednesday, December 19th, and it is 2018. I am currently at the Charlotte airport, having spent yesterday in Detroit, and I'll be heading back to my Fort Lauderdale office tomorrow. Now, while in Detroit yesterday, I was able to sneak into the second half of the Tigers game. When I say sneak, I bought a ticket, I paid for it, I paid for parking, I just didn't get there for the start of the game. Well, why is this important? Well, it marks my 21st ballpark on my quest for 30, so I've got 9 to go. That's my version of batting for the cycle. Hometown team lost last night to the Twins, but it was a great finish to a great game, a 2-out rally, and it's a beautiful ballpark. I strongly encourage that if you have the opportunity, visit, take your kids, you're going to love it. Now, even though the Tigers lost last night, I'm going to tell you who won today, and that's the banks. Financial intelligence training students know how important the financials are to help gauge the market's strength or the market's weakness. Well, today, on gargantuan housing start numbers, the banks had a great lift. The run rate in housing starts is besting 9% month over month and year over year. Now, that's especially impressive because permits are at a 15-month low. Now, why the big lift in financials? Well, the banks make money off of a spread, and today the 10-year, well, it leapt to over 308 on the news, and I think, if I'm correct, that's a 4-month high. Now, they love this because remember, they make money on their longer term investments and they service their debt on the lower rate. As the spread widens, well, so do the bank's profits. So let's loosely call that positive arbitrage. Now, another subject FIT students are going to be aware of, positive arbitrage, because we in our class covered loan rates and cash accumulation vehicles. Now, these instruments can be a bit complicated to understand, therefore it is important to make decisions on what you know something is, informed decisions, especially on complicated things like loan provisions and the varying types. That could just be one very specific example. Now, let's jump back to the market for a second. In the news recently, we've seen a particular stock where much noise has been focused on it, and that stock is Nike, NKE. Now, I'm sure you're familiar with the Colin Kaepernick saga right now. I say saga not because I'm picking one side or the other, but because that's what the media is making this out, much like Nike had wanted it to be. I mention it so you can take a look at the chart and look at the stock price. On the news, the pullback, or dare I say, the kneeling pattern, held the 50-day moving average, recovered and paused, and came right back up and broke out over that pivot of 83.68 on somewhat better volume. Take a look at the volume pattern. Now, let me be clear, it's not a stock recommendation, but it is more about pattern recognition of what a healthy stock looks like. Now, earnings come out in 6 days, and traders may be looking for implied volatility discrepancies, which are often an event-driven function, like we're going to see on September 25th, earnings released after their close. Personally, I am much looking forward to the way the pattern plays out because the technicals look good, the news has drawn a great amount of attention, but quietly in the background, we've got a company, Nike, that sponsored 2 of the World Cup final teams, Croatia and France. I'm going to guess that some jerseys were bought, and maybe, just maybe, well, that's going to help out with the release. Now, if you are trading, you got to remember that stock and stock options involves a substantial degree of risk. It's not suitable for all investors. If you like the charts like I do, well, remember that past performance is not necessarily indicative of future results. I'm Al Labarola for Financial Intelligence Training. Thanks for watching, everybody.